So today's agenda, some of the top things we're going to look at include the current competitive state of the U.S. wireless market. We're going to take a look at how convergence is impacting the market via M&A, broadband expansion, and cable MVNOs. We're also going to take a look at key trends that will affect operator business performance in 2025. My name is Steve Vachon. I'm a senior analyst within TBR's telecom practice. I focus on the operator side of the telecom market. Before we jump in, I'm just going to give you a quick overview of TBR's research portfolio if you're not familiar with it. So on the telecom side of things, we have our benchmarks, market forecasts, market landscapes, and company reports listed out here. So most of the content from today's presentation is going to be from the US Mobile Operator Benchmark. So this is a quarterly benchmark that we publish. It's focused on tracking the business performance of leading operators within the US. We've got a wide variety of coverage covering the telecom market, both on the operator and vendor side of things. So we take a look at some areas like 5G, 6G, private cellular networks, edge computing, telecom AI. Those are like some of the topics we look at. We also have dedicated company coverage too, like on the vendor side for the network equipment providers. We have dedicated company reports on companies including Cisco, Ericsson, Huawei, and Nokia. We also have dedicated operator reports as well, cover companies including AT&T, Comcast, T-Mobile, and Verizon. So jumping in, so taking a look at that graph on the left side, so we're looking at US mobile operator market share and revenue. So looking at the market share, we still see Verizon still leading the markets, 37% market share, then followed by AT&T, then T-Mobile is next. Up next is Spectrum Mobile. That's Charter's wireless MVNO brand. And also up next is, after that, is Xfinity Mobile. That's Comcast wireless MVNO, if you're not familiar with that. After that's UScellular, then Dish, and Optimum Mobile. So that's Altice USA's wireless brand there. So looking at over big picture trends, so you can see most of the operators were able to increase wireless revenue for Q24. Only exceptions are UScellular and Dish. Saw some single-digit declines year to year. For those companies, looking at the total market, so it's a 4.5% year-to-year growth in Q24. If you're looking at inflation, that's getting offset. The inflation in 2024 is about 3%. So you factor that in. So seeing some offsets from inflation. Looking at factors that are driving wireless revenue growth that we're seeing in the market. So one of the things we're seeing is continued connection growth. So most quarters, we're still seeing positive net additions, especially on the postpaid side. We're going to look a little bit later in some of the sources that are driving that growth. We see adoption of premium unlimited data plans. So we see some new higher tier plans in the market. One would be like T-Mobile, the Go 5G plans. Those are starting at $100 for the Go 5G Next plan. So I see some customers stepping up to this more expensive service plans, some features like early upgrades, for example, for T-Mobile, so you can upgrade every year in their Go 5G Next. Things like streaming services getting bundled in, extra mobile hotspot packages. Those type of things are incentivizing customers to move up to some of the more expensive service plans. So it's been helping to drive revenue growth. We see fixed wireless subscriber growth. It's still a robust business for the U.S. operators. A little bit of deceleration in 2024, but overall still very strong business. See a lot of connection growth there. Up next, we see increased adoption of converged services. So we'll use that term throughout today, converged services. So basically, that's just bundling mobile and broadband services. So it's been a big focus for the operators, last couple of years. So seeing more customers buying both mobile and broadband services from the same provider. So it's been helping to drive revenue growth for the operators. We see cable MVNOs sustaining strong connection growth. So look at the brands like Xfinity Mobile, Spectrum Mobile, still driving pretty high customer growth still. Definitely their competitive pricing is helping with that. We also see connected device portfolio expansion. Things like wearables are helping to drive growth. Some things like in the commercial IoT space too, like telematics, asset tracking solution. Those type of things are driving growth too. And we see increased adoption of higher price smartphones. So generally in the market, we're seeing the average price per smartphone going up. We're seeing more customers moving to the higher tier devices like the iPhone Pro models. We're seeing that. We also see the foldable devices. Those devices can be, close to $2,000 in price. That's helping to drive revenue growth too. Just more customers gravitating to the higher price smartphones. So looking at some factors that are inhibiting revenue growth in the market. So this is going to see something we're going to see come into play in 2025. That's going to be changing immigration policies under the Trump administration. So that would include mass deportations that are happening. So that's going to have an impact on customer growth in 2025. We see macroeconomic challenges, looking at things like, uncertainty around tariffs. We're not sure exactly, both on the consumer and the business side, some uncertainties like how is that going to come into inflation? How is that going to affect a consumer's budget? How is it going to affect the business budget as well? So those pressures might lead to some, consumers and businesses like reevaluating what they're spending on their wireless services. They might need to move down to cheaper plans. They might have to postpone updating their devices because of that. Another inhibitor we're seeing is a maturing smartphone market. So on one side, we're seeing the customers move to the higher priced devices, but at the same time, the upgrade rates is becoming more prolonged. So there's a longer upgrade cycle. Some of the things that the industry that thought might spur like a super cycle, like the iPhone 16, the new AI features, that hasn't really panned out yet. There hasn't been mass adoption of the iPhone 16. There hasn't been a major uptick from those features yet. So that's contributing to things being prolonged. The macroeconomic challenge is going to play into that too, with upgrades being more prolonged as well. And we also see some aggressive pricing promotions. Still see very aggressive sales offers, especially for the devices. You still see like the $1,000 off iPhone promotions, those type of things. And we also see operators introducing lower price service options. It's especially happening in the prepaid market. Considering the ACP program ending, I think that was last May, that program ended. So there's some new service plans the operators are offering to really target that value market with the ACP going away. So it's been an inhibitor of revenue growth of customers moving over to those lower price service plans. So moving on to the next slide. So we're looking at this bubble graph. So this is for Q24 wireless revenue, EBITDA margins, and year-to-year revenue growth. So revenue, just explaining how this graph is laid out. So revenue is that relates to the size of the bubble. So the larger the bubble, the higher revenue the company is generating. The x-axis is wireless EBITDA margins, and the y-axis is year-to-year revenue growth. I'm going to focus on the margin performance on this slide. So just on the big picture things, most of the operators I covered on this slide, they're able to increase the wireless EBITDA margins year to year and for Q24. So a big part of that is the cost cutting. So things like headcount reduction, AI implementation, those type of things have been beneficial to the operators' margins. Looking more specifically at some of the companies. So Verizon, so you can see they're the leader in margin performance still. Verizon, there's been a pretty strong focus on headcount reduction the last several years. They had numerous voluntary separation programs. The latest one they had actually saw a reduction of 4,800 employees. As part of that, I think that just ended this last March, I think is that when that ended. So a lot of AI also being implemented in Verizon as well, especially in the customer service type of side of things. Leveraging AI to help the customer service employees be more efficient, more quickly resolve customer queries, those type of things. Also the sales side of things too, leveraging AI to give tailored product recommendations to customers as well. So some efficiencies from that, definitely helps the operators streamline headcount, just getting those efficiencies in the customer service and sales type of, side of things. AT&T, so right behind Verizon, also very aggressive in cost cutting. They've had multiple cost cutting programs the last several years. So their newest program, they're looking to cut $3 billion in costs from 2025 to 2027. So lot of the strategies are similar to Verizon. Headcount reduction, there's a focus on that. AI implementation, especially on the customer service side for AT&T. Also seeing some sunsetting legacy products and infrastructure. That's more on the wireline side of things, but I mean, like decommissioning their copper networks, going to be a lot of cost savings from that. Also, divesting non-essential real estate. That's been a focus for AT&T also the last several years. We've seen them, put out some press releases on several different real estate assets they've divested the last several years. So getting some cost efficiencies from that. Then looking at T-Mobile. So you can see they're pretty close to AT&T and Verizon in margin performance now. Pre-Sprint merger, they're trailed much more behind in margins, but they're definitely catching up to AT&T and Verizon. A big part of that is the Sprint merger synergies. So I mean, they're pretty much done realizing the full mergers from that synergies. That's been boosting their margins. On the cost-cutting side of things, they're also very focused on AI as well. Especially on the customer-facing side of things, especially with their app. So they have a new mobile app called T-Life. So their strategy is integrating AI as part of that. So they're working with OpenAI on that app. So they're looking to get a lot of efficiencies for that. One of the things they're looking to do is leveraging AI in combination with this mobile app to reduce customer care calls by 75%. So just having the customers directly use the app, leveraging the AI features built in, that's going to help to solve the problem, most of the customer problems. There's going to be much less need to call the customer service representatives, much less of a need for the customers to visit the retail store. So you can get some major efficiencies from there. They also look to aim to eventually support all device upgrades digitally through this app. So in the future, they're looking to have all the customers, when it's time for them to update their device, they're going to buy it digitally, they're going to receive it, and the upgrade is going to be, 100% digitally using the app. So it's not going to need to, get a T-Mobile employee with that. So it's definitely going to help T-Mobile streamline headcount as well if you're looking at things long term. Just another call out on this graph. This is looking at the cable MVNO specifically. So you can see both Xfinity Mobile and Spectrum Mobile, they're generating positive margins now. Took both of those companies several years to get there. They both started operating at a loss. Spectrum Mobile actually became a bit of positive this past year. Xfinity Mobile became a bit of positive, I think maybe a couple of years ago, I think. So those brands finally gained the scale to become profitable brands on their own. But looking at Optimum Mobile, you still see they're operating at a loss still. So it's about a negative 50 wireless EBITDA margins that they're at. So they're much further behind Spectrum Mobile and Xfinity Mobile, much further behind in the scale. So moving on to customer performance for Q24. So this is total postpaid net additions. So this includes all types of postpaid connections. So we've got the note at the bottom. So the devices includes phones, includes FWA connections, tablets, wearables, mobile hotspots, and other devices. It excludes wholesale connections. So breaking down the things that are driving customer growth for the operators. So you can see T-Mobile, they gained 1.9 million postpaid net additions in 4Q24. So, I mean, they've been leading pretty much the last decade or so, postpaid subscriber growth. Recently, a big focus for them has been targeting under-penetrated markets. So these are markets that T-Mobile has historically had a low market share in. So there's two main markets they're targeting. One is smaller and rural markets. So it's been a focus for them the last several years. So one of the big initiatives is increasing their distribution in those markets. That includes launching new retail stores in smaller markets. Another thing is leveraging FWA to gain traction in these markets as well. So looking at some of the smaller rural markets, a lot of the time there's very limited broadband options in those markets. So T-Mobile has been leveraging FWA to really target those markets and leveraging FWA in those markets as well. There's a lot of cross-selling opportunity with their smartphone services. So that's been driving growth for T-Mobile. Another major market they're looking to gain market share is in the B2B market. So that's another market like historically they've been underpenetrated in. I'd say like a big reason for that was just their network reputation. Like, before 5G, going back to the LTE era, Verizon and AT&T had a much more stronger network reputation, especially like in the B2B side of things. That's no longer the case in the 5G era. Like more and more businesses are realizing T-Mobile's a strong network quality. The other things that's been helping them out in the B2B market is being the first to 5G standalone. For instance, like being the first to have network slicing use cases, that's been an advantage for T-Mobile in the B2B market. They have some early use cases out there. One would be for SASE. So they're using a network slice for SASE type of services to offer a secure network slice through that. So an enhanced security, they're leveraging network slicing for that. Also a new service for first responders. So it's called T-Priority. So this is a dedicated network slice dedicated to first responders. So it's basically giving enhanced reliability to first responders, more consistent speeds, lower latency. So it's been helping them out in the first responder market too. So they're starting to get some like large deals with the first responder market, such as the city of New York. They announced that recently. Moving on to Verizon, so we see 1.4 million new postpaid connections. So we've seen a rebound for Verizon in the last year or so, especially in the consumer market. I would say a challenge they've been having in the last several years is differentiating their pricing. Historically, Verizon has targeted the higher end of the market, but they've been really successful in resolving that the last couple years, especially through their My Plan program. So basically, they're giving customers more control of what they're paying for in their packages. So basically, if they want to pay for faster speeds, there's an option to pay for ultra wideband, which is their millimeter wave and mid-band 5G services. If they're content with just low band 5G, they don't need to pay that premium. Same thing with mobile hotspots. There's options to pay for more mobile hotspot data if you want that, but if you don't need to. Same type of custom, options to customize what type of streaming services. If a customer doesn't want that in their bill, they have the option not to include that. But if they want to have multiple streaming services, there's multiple services they can enroll in at a discount. That's been definitely helping Verizon more effectively differentiate their pricing. So it's been helping their consumer performance the last year. Looking at AT&T, 839,000 postpaid net additions. B2B is still a very strong business for AT&T, especially FirstNet. We're still getting about 300,000 or so new connections each quarter for FirstNet. That's been driving growth for them. So looking at the next ranking operators, you have Spectrum Mobile, Xfinity Mobile, and Optimum Mobile. So the cable MVNOs, both Spectrum Mobile and Xfinity Mobile still strong quarters for them. Optimum Mobile is is much lower net additions compared to the other two cable operators. That's actually a 5 highest net additions for them in 5 years. They're still seeing strong growth for the cable operators, especially the pricing side of things. That's been the advantage for them. So a lot of promotional activity too that we're seeing, offering 1 year free service to broadband customers, offering a free year mobile service. That's been helping to get customers too, having that look, it gives a good introduction, it's basically low risk. They're not paying for the line for a year. They can check it out. So it's been leading to a lot of long-term paying customers through that strategy. And then looking at Dish, so Dish has been losing, thousands of customers a quarter the last several years. But we've seen a turnaround a couple quarters. Most of their subscriber growth is coming in prepaid, but on the postpaid side of things, they're getting some traction as well. I think a big driver of that is that they've been working with Apple. So one thing they're doing, say if you buy an iPhone, either through a retail store, through the Apple app or through the Apple website, you have the option to activate that phone on Boost Mobile. That's been definitely a big benefit to Dish, just to It's been a big benefit in helping to promote the brand, having that option if like customers purchasing an iPhone, having the option to enroll in Boost Mobile while doing that. Then looking at UScellular, so losing 14,000 net postpaid customers in 4Q24. Biggest challenge of UScellular is just like the competition in the rural markets. I mean, historically, that's been their differentiator, having, their distribution and their networks in the rural market. But that advantage is, pretty much it's going away from them. Looking at T-Mobile, there's been a big focus on the rural markets for them. Same thing with AT&T, a lot of initiatives in rural, along with their FirstNet initiatives, building out FirstNet. They've been increasing like distribution in rural markets as well alongside that to consumers. So cable MVNOs too is a big focus in rural markets lately too. So a lot of competitive pressures. So, I mean, that's a big factor in them like pursuing the acquisition with T-Mobile. And basically they realize it's going to be very challenging for them to be a viable standalone company long-term. Okay, looking at this next slide here. So this is going to give us a bigger picture outlook on how subscriber growth has been trending in the US the last like several years. So the top left, we have postpaid phone net additions in 2020 through 2024. And then we have prepaid net additions in 2020 to 2024 also. So some of the major trends that we're seeing. So we can see like the US operators, they sustained robust subscriber growth in 2024. If you look at that top left graph. So like comparing those 2 years, if you look at the combined postpaid phone net additions from T-Mobile, AT&T, and Verizon, it was 5.6 million postpaid phone net additions in 2024. That's actually up compared to 2023 with, again, 5.3 million net additions. The market being more mature, the U.S. operators are able to increase postpaid phone net additions. So like what's driving that? So there's a few things we think that are main factors driving that. One would just be population growth, including legal and undocumented immigration, especially looking at immigration that 2024 and the couple of years before that, like seeing like things like return to pre-pandemic levels in immigration. That helped out like in 2024, as it's attributed that to a driver customer growth. We see families enrolling their children in smartphone plans at younger ages, especially look at some of the family plans. It's has some like relatively low cost options if parents want to enroll their children in that. So it's been helping to drive customer growth. We see B2B connections, especially with move to hybrid work. More companies are giving their customers a dedicated corporate lines for their devices, and it definitely helps out like in security and privacy reasons. The employees aren't using their personal devices to access corporate data and apps. So we're seeing that. We see second number connections. So this has been more of a newer trend. So basically what this refers to is basically a person that has multiple numbers. So this would be like one customer, but there's multiple devices, like multiple numbers on their phone. There's different like options to do this within the industry. Verizon actually has a option called second number, where you can add like a second number to your account. I think it's for $15 a month currently. So basically, there's a lot of like use cases for this, and more like on the niche side of things. But one of the things that we're seeing is like ride sharing employees. So if like someone works for Uber, they might have like a separate line to use for like their work for Uber and have like a separate personal line. Other like use cases might be like a meal delivery service, like a DoorDash. We see those type of like scenarios. People that sell often like an online marketplace, like Facebook Marketplace, Craigslist. We have see some people using that second number for those type of scenarios as well. There's multiple like different use cases we're seeing for that. And another thing we're seeing is prepaid to postpaid migration. So if you look at the bottom left graph, so you see there's been some subscriber losses overall on the prepaid side of things the last several years, especially for Verizon. Dish has lost like a significant amount of prepaid customers too. So you see some of those prepaid customers moving to postpaid. there's a lot of features that are exclusive to postpaid. Usually, like the device promotions are like more significant in postpaid. You have more financing options typically. Some incentives are exclusive to postpaid for some like the streaming services, those type of things. So it's incentivizing some of the prepaid customers to move to postpaid. So we started strong in 2024. I think there's going to be some headwinds in 2025, some different factors that are going to cause that. So one would be the uncertainty around tariffs and inflation. And then we see mass layoffs within the public and private sector. So we see some like economic challenges from that. So basically summing up, like the environment, both on the consumer and the business side, I'd say uncertainty. So a lot of people just aren't like really certain what these, what the tariffs are going to mean to the consumer, what does it mean to the business. If you're a consumer, you're not like 100% sure what groceries are going to be costing you in a few months. So it's definitely causing uncertainty. I think it's going to cause some customers to reevaluate what they're spending on wireless services. Might lead to some like consumers moving down to lower price service options. We see that, in B2B space is same type of thing. In the federal space, we're seeing that too, just like with the DOGE impacts. Not really sure how the impacts are gonna like affect them long term. So it's been like delaying some like deals also of the telecom operators. But in the federal space as well, we've seen those type of things happening. So a lot of impacts from that. And another thing we're going to see also, it's immigrations policies established by the Trump administration. So we're going to see some impacts from that as well. We'll have a big, clearer view of the impact over the next several quarters as the operators release their customer figures for the year. The operators have generally been downplaying the impact, but I think we're going to definitely see the impact once we see the subscriber growth of the next couple of quarters. So taking a look at convergence, some of the trends we're seeing in the U.S. So if you look at the top left graph, that is a percentage of AT&T fiber subscribers also enrolled in AT&T mobile services. So looking at the graph, so you can see how things are tracking. So at the end of 2021, there's 35.4% of AT&T fiber customers that were also enrolled in AT&T mobile services. That grew to 40% at the end of 2024. So you can see that's gradually growing, but there's still a huge amount of opportunity for AT&T to target that market. So basically, there's still 60% of AT&T fiber customers that don't subscribe to AT&T's mobility services. So still a lot of like cross-selling opportunities there. It's the same type of situation in the cable MVNO market as well. So looking at the bottom left graph, so this is the adoption rate of converged mobile and broadband service plans in 4Q24. So looking at that graph for Xfinity Mobile, for example, so basically what that's saying is 12% of taking Comcast residential broadband customer base, only 12% of those customers are enrolled in Xfinity Mobile. So a very small portion of the cable operators' broadband customers are also enrolled in the mobile services as well. So there's still a huge amount of opportunity for cross-selling to target. So some of the trends we're seeing in convergence, the big driver of that is to create a stickier ecosystem to reduce churn long-term. That's through discounted pricing compared to buying services separately. The operators usually give a cheaper rate if you bundle both broadband and mobile together. And it's also the convenience of purchasing services from the same provider. So it's just more convenient, if you buy both of your services from the same provider instead of, buying your mobile services from Verizon and broadband from Comcast. It's just easier to just have like one service provider to do your billing through. Some of the strategies we're seeing to strengthen convergence. So we see expanding broadband service availability. So it's both FWA. We see the operators expanding service availability there. Also on the fixed side of things, so that include like fiber and also the cable operators expanding their broadband footprints as well. We see cable operators increasing their focus on wireless brands to retain customers. So the pricing pressures we're seeing in the cable operators we're not really seeing them lowering the broadband prices per se. It's more of leveraging mobile, bundling that with the broadband to give the discount. That's what I'm seeing. Instead of like lowering the rate to keep a customer, they'll really push, oh, you can get a mobile line for free for a year, those type of things. So using that to strengthen their value proposition. And then we see pursuing acquisitions. There's multiple acquisitions going on in the market. Some of them have already closed. Some of them are still pending. So the major ones that we see, so we got Verizon and Frontier. So that's still looking to close. So if that happens, we're going to see Verizon providing fiber to 30 million passings by the end of 2028, and eventually up to 40 million passings. So a lot of cross-selling opportunity if that acquisition closed for Verizon to target their mobile services to Frontier's broadband customers. We also see T-Mobile. So they've got multiple acquisitions. So they have Lumos that recently closed, and there's Metronet, which should close later this year. So those are both smaller fiber providers. So T-Mobile is partnering with private equity firms for those acquisitions. That's going to give T-Mobile 12 million to 15 million households covered by 2030 if both of those acquisitions close. So there's a lot of cross-selling opportunity there too for T-Mobile to cross-sell their mobile services to these new fiber customers. And then we see T-Mobile and UScellular as well. There's going to be a lot of opportunity there for T-Mobile to target FWA in those rural markets. UScellular is in. So UScellular already has an FWA business, but it's very small. T-Mobile has much more resources to really push that out to UScellular's customer base. And then we see AT&T. So they've been very aggressive with their fiber footprint still. Their new target is to reach 50 million locations by the end of 2029. So a lot of new cross-selling opportunities with that fiber expansion. So looking more specifically at FWA in the market, so we got a couple of graphs on the left. So we have for Q24 broadband net additions. On the top left, we have total FWA net additions at the bottom left graph. So some of the trends that we're seeing. So you can see T-Mobile and Verizon are leading the industry in high-speed broadband additions driven by FWA. So looking at that graph there, so you can see both T-Mobile and Verizon, they're significantly outpacing the rest of the market. So looking at T-Mobile, that 428,000 figure, that's all FWA. And for Verizon, that 408,000 is predominantly FWA as well. There's some Fios in there. So they're still outpacing the market significantly. All right, and with that, so we see the broadband connection losses intensifying for cable cos, including Comcast and Charter. So you see the steep customer losses for Comcast and Charter in 4Q24. So things actually intensified for both of those companies in 4Q24. There's steeper subscriber losses for both of those cable operators. So initially, FWA is more disruptive in the consumer market. We're seeing some more disruption too in the B2B market too the last year or so. So one of the things we're seeing, more businesses are seeing FWA sufficient for most business cases. I think there's a little bit of hesitancy at first, but now that the technology has been more proven, we see more customers opting for that, especially with macroeconomic challenges, especially for SMBs. You're going to need to make some costs there. Just having that technology be more proven in the market, with it being more, with it being sufficient for everyday use cases like, Microsoft Office, those everyday B2B applications. FWA is going to be sufficient for that in most scenarios. We see FWA provides greater ease of installation over traditional broadband too. So that's been a big benefit to some customers too. Especially if it's a business, it's expanding quickly. They can launch new locations, install FWA themselves. They don't need to wait for a technician. That's been helping to attract some businesses as well. Another thing that we're seeing in the market, so we're starting to see some new price points in the market. So initially, Verizon and T-Mobile is predominantly, they centered on one service plan for FWA. We're seeing new higher tier plans getting introduced in the market. T-Mobile is the biggest example. So they have 3 plans currently ranging from $50 to $70. So basically, you have the entry level plan. But if you want higher tier options, you can go to one of the premium services plans. So those things include something like a faster gateway. That'd be an option. Some of the more expensive plans have like, exclusive bundles, like a video bundle. They have enhanced security capabilities to that too. So we see some upselling going on in the FWA market. All right, and we see things are going to expect to be robust the next several years for FWA growth. So we've seen some pretty ambitious targets being announced recently for both T-Mobile and Verizon. So we expect T-Mobile to reach 12 million FWA connections by the end of 2028. That's compared to 6.4 million at the end of 2024. And we also see Verizon, they want to reach 8 to 9 million FWA connections by the end of 2028, compared to 4.5 million at the end of 2024. So basically, both of those operators are looking to basically double their FWA customer bases over the next 4 years. All right, next slide here is I'm going to take a high-level look at how CapEx has been trending in the last several years in the U.S. wireless market. So you can see 2022 is when spending peaked. So that was the peak 5G spending. You saw the most spending on mid-band 5G deployments in 2022. After that, so we're generally seeing spending like decelerating and then like stabilizing after that, or slightly decelerating for some operators. Only exception that we're seeing is AT&T. So you're going to see them increasing. They increased CapEx in 2024 and also 2025 also. So they're they're undergoing a major network transformation, network modernization with Ericsson. So they're under like a major contract to update their network, Open RAN compatible infrastructure. So there's a lot of spending going on with that, but the rest of the market, we see some stabilized spending in terms of wireless CapEx. Major things that we're seeing. So one major area of CapEx that we're seeing is the focus on building out mid-band 5G to remain in markets. So most of the U.S. already has mid-band 5G coverage. T-Mobile is at 300 million. I think AT&T and Verizon are over 250 million now. So it's really spending to reach those markets on the outskirts, the rural markets, the suburban markets. We're seeing that. That's a big driver of CapEx. And the other major area of CapEx we're seeing is continued network densification. So a big driver, that's going to be FWA. So if you look at both T-Mobile and Verizon, so we talked about their big subscriber targets for FWA. They're going to need more network capacity to do that. So their CapEx over the next several years is going to help to do that. Look for like T-Mobile, considering T-Mobile, they have 1 million customers on their FWA waiting list currently. So there's been some capacity issues with that. But the spending over the next several years is going to help to accommodate that, building out the network still at a extra network capacity for FWA. There's still a lot of room for them. I think recently they said they only deployed 60% of the mid-band spectrum for 5G. So still a lot of spectrum that they can deploy that's going to help with the densification to expand availability for FWA customers. So wrapping things up, the 2025 industry outlook. So many things you're going to see is macroeconomic uncertainties will impact CSP spending. So we're going to see macroeconomic challenges, including from tariffs and the expected inflation they may cause, will result in operators being more cautious with both OpEx and CapEx spending. We're going to see operators will double down on cost-cutting initiatives, especially as it pertains to AI implementation and automation to yield efficiencies. And then we're going to see investments in 5G standalone and 5G advanced are likely to remain subdued in the U.S. due to uncertain ROI. Yeah, especially considering the uncertain impacts of tariffs. We might see some delays still to 5G standalone and 5G advanced. We're going to see more of a priority in CapEx and things that are going to give more of a tangible ROI to it. Considering something like adding network densification to open up FWA service availability, there's definitely a tangible ROI for that for the operators. Things like 5G standalone and 5G advanced, like the use cases are still, in the early stages. So the economic climate, we might see some delays in those type of investments with more of the focus on the type of network investments. So I'll have more tangible ROI. Then looking at the customer side of things, we'll see customer spending will also be affected by macroeconomic uncertainties. So consumers and businesses will optimize their spending in response to macroeconomic challenges, including moving to less expensive service plans and delaying device upgrades. And we see bad debt expense will also likely increase. So, just considering macroeconomic challenges is a good case. You're going to see more bad debt expense for the operators. This would mainly be from customers delaying bill payments. This is something we're likely to see. We'll see operators will adjust their pricing strategies to address macroeconomic challenges, including more heavily relying on the value proposition of the converged bundles to attract and retain customers. So we've seen more pricing offers in the market. One example is Verizon. They recently launched a new pricing guarantee. I think it's for 3 years. So you're going to see more things like that, just giving, helping to accommodate price-sensitive customers within the economic climate. We'll see those type of promotions and initiatives happening. And then lastly, we expect further consolidation is likely to occur in the U.S. So U.S. CSPs will seek to further leverage acquisitions to strengthen their convergence strategies. One of the major ones that we're seeing is Lumen is exploring the sale of its consumer fiber business. So this has been talked about in the market. I think Bloomberg initially reported this. So Lumen is looking to sell their consumer fiber business. That's about 1 million connections, I believe. So AT&T has been, speculated as the most likely suitor for that. So a lot of cross-selling opportunities from that would rise from that, giving AT&T the opportunity to target those 1 million Lumen residential fiber customers. And lastly, we'll see additional tier 3 regional operators will likely to be acquired by tier 1 operators. This is mostly going to be the remaining. A lot of these operators have been acquired in recent years, but there's still some remaining regional operators. We're going to still see more of those being acquired. Acquiring those are going to give the tier 1 operators more spectrum and also give them more customers being acquired from those purchases. That wraps things up. That wraps things up on my end. All right, looks like we got some Q&A. Yeah, so let's look through the questions. So we have a question about basically non-terrestrial satellite networking market and whether direct-to-device services such as satellite text and voice services will drive growth on this segment. So we see a lot of, this is definitely the emerging segment for the operators. The biggest one would be Starlink. And T-Mobile is getting the most publicity. But there's multiple partnerships going on in the market as well. AT&T and Verizon partnered with AST Space Mobile. There's some other ones going on as well. So initially, we're going to see it be more of kind of an incremental value add for those type of services. T-Mobile is looking to charge extra. I don't know the exact figure. I think it was around $15 a month is what they're looking to charge once that service goes commercial. So it's going to be a value add. It's also going to be I think it's going to largely play into moving customers to higher tier services too. I believe T-Mobile is looking to offer that on their highest tier Go 5G plan. So it's going to be more of an incentive initially, reserving those D2D services on the higher tier plans. That's how I'm seeing the initial focus on that. So we have a question about the future of Dish and Boost. Um, yeah, it's a very yeah. There's a question about how do I perceive the future of Dish and Boost. So I basically see like Dish and Boost, they're taking Sprint's position in the market, which they historically held, which has been targeting the lower end of the market. That's where I see like Dish and Boost like competing the most. It's been like very like, challenged in the market the last several years. I mean, ever since like post T-Mobile and Sprint merger happening, it's been a little bit of turnaround the like last several quarters from that. Um, Yeah, I think overall, associates going to be really challenged in the market. They maybe have like a niche with the lower end of the market, but overall, like, it's been a very like, challenging position for them. So we have examples. What are the latest successful examples of 5G standalone use cases? So I'd say the biggest like benefits you're seeing from standalone would be on the network slicing side of things. So like very early, T-Mobile's been a leader in this market in this segment. I think the most tangible like service we've seen so far is just T priority. So basically, that they're using that as like an alternative, like an alternative service to compete to service like AT&T FirstNet. So enhanced reliability, faster speeds, more consistent coverage. So it's been like so far that's been like it's starting to get traction for T-Mobile, especially getting like a contract from the city of New York. That's going to be like I see that as being a good disruptive play for T-Mobile using that. Some of the other things we're seeing is in SASE, like having enhanced security from network slicing. Other use cases we're seeing with network slicing are kind of like a niche side of things. We're seeing it like being used for like broadcasting, like enhanced like video broadcasting. We're seeing that also for live events. T-Mobile has like talked about this. If you have like network slicing at live events, think like some like PGA events that they've helped to like host. They use like 5G standalone there that help to like do support like use cases like PO like point of sale terminals, those type of things at large events. So we're seeing like those type of situations using network slicing. So I'd say network slicing would be like the biggest like tangible benefit we're seeing so far from 5G standalone.